Well, hello and welcome back, everyone, to another Friday night live market conversations. Man, I'll tell you what a week we're having in the crypto space, right? Oh my goodness. I got a couple of guests lined up. We're having trouble streaming your destination. It's possible that you're, oh no. I was trying to stream to Nick's friggin' theta thing and it didn't happen, and I'm just going to remove it. All right. So anyway, here we go. We're live. Look at ProfX is in the house. Look, we've got Andrew, P. Kelly, Demayan, Lori, welcome. Scorpion. Oh my God, what an incredible guy that is. Had a great interaction with him today. D. Precise is in the house. Good to have you. Well, tonight, folks, check this out. So I've been on Nick Black's channel like 3 times this week, I think Wednesday, Thursday, and Friday. And each day there was this theme, right? There was these things that seemed to kind of always be weaving in and out of the conversation. And they're of the nature that indicates, right, that there is a paradigm shift happening. And it's not just a paradigm shift in the technologies that most of us are following, right? That we're investing in their coins. It's a paradigm shift in trying to understand markets. The old rules of looking at price to earning ratios, discounted cash flows, market caps and outstanding shares, all of these things that have been tried and true and tested, ways to measure the strength of a company, are not at all applicable in the crypto space. We are all having to learn how to view assets through the lens of network effects, right? How do networks grow and increase in value? Well, what we have in our history is we have digital networks that started coming online with the advent of the internet. But even before that, there were networks. Networks before they even were called networks. Back in the old days of John D. Rockefeller, when he started drilling for oil in Pennsylvania and creating the quote-unquote oil network, car networks. Then electricity came. Networks are not a new thing. However, in the past, the people that profited from networks were the founders. This is a completely new paradigm where we, the network participants, are actually driving the value of these networks. Well, how do you really value that? Do you value that based on the number of people on the network, i.e. wallets? Do you value that on the number of dollars that are on the monetary networks? Market cap? Do you look forward and forecast what these things are capable of doing? It's all a really interesting kind of jigsaw puzzle to put together. And I'm glad that you're here with me and my guest tonight to have this discussion. So get your questions and stuff fired up. We're going to talk about the macro trend. Where is this industry going? What's it going to swallow up and spit out? What's its competitions? We're going to look at network effects and adoption curves. These are all things that we have historic precedent for, but it's not an apples to apples conversation. A lot of this is us measuring apples to oranges. Excuse me. So to kick the conversation off tonight, I'm going to bring in Adam. Adam runs a Cardano stake pool, and he's an incredibly bright guy, very good conversationalist, and a really interesting dude. And before that, let me just say hi to Tiffany. Welcome Jungle Inc. and Bill Gould, Tony Morissette. Tony, so glad to see you, brother. Ellie Pool's in the house. So let me bring in Adam, and let's go ahead and get this party started with what I think is one of the most incredible pieces of news I've heard in the crypto industry in a long time. And that has to be the Cardano Africa experience, man. Signing countries to contracts on the blockchain. Oh my goodness. What your thoughts, your opinions? What are you thinking?
I think that the upside is so impressively massive when you think about Ethiopia as a petri dish, and I think that's how they're thinking about it as well. 5 million, what an amazing large petri dish. But when you start there and you can prove your worth and you can prove what's really in theory right now, to be fair, Cardano hasn't really proven a line. I think that the upside could be amazing, for a project that I think's had, even a few hiccups in the past few months. I think that could be just a slam dunk.
I'll tell you from what I'm recalling, like the biggest takeaways or context for me has been Bitcoin's store of value. That's an absolute valid, vindicated use case. You've got Ripple's RippleNet in their ability to digitize payments, some with XRP, some without. But the point is that is a real use case. That's a real thing. And here we have this Cardano project, right? Launching elements that haven't been touched yet. Digital identity, education scoring in data collection on students and teachers alike, to refine and create efficiencies in education systems. That has nothing to do with payments. It has nothing to do with store of value. However, the mechanism of the blockchain requires transactions. And what do transactions require? A little bit of ADA.
And one of the smartest little marketing nuggets that I did see in that was, I like how they're going after differentiating themselves from DeFi of calling their offering RealFi. I think that's brilliant, of saying, hey, DeFi is nice. It's kind of gets back into that internet money kind of conversation, what's tangible. And they're saying, no, this is RealFi. We're really financing actual goods and services. And we're using how I still think they're using Ethiopia as a petri dish. And I've heard Charles talk about that as well. If you want to get to first world companies, you got to start with third. And, I think it's a brilliant little marketing push. I've got a philosophical question for you, Jerry, when I heard your intro. I think this would be good. All right. This is like a chicken egg question. Which comes first when you're looking at a project? Or, which leads, the network effects or the narrative?
What comes first, narrative or network effects?
The narrative or network effects, like which leads the other. Maybe talk about the interaction. And
I think they're intertwined. I think they're intertwined, but I don't believe you get people onto a network without a narrative, right? I don't believe there's a lot of people joining networks blindly. I think there's some narrative driving that to them to that network. It's what drove me to Cardano. It's what drove you to Cardano and creating a stake pool. It's what drove me to XRP. It's what drove me to Bitcoin. What's drove me to everything wonderful in my life. Speaking of which, Crypto and Coffee Live TV version 3 unsponsored is now in the house.
Nice.
Welcome, Nick. I think Nick heard that question offline. I'd like to get Nick's answer on that. Narrative.
First, I got a beef. I got to air up my beef with Jungle.
You got a beef? Who's got a
Never
beef
sell
with Jungle
everything.
Inc.?
I got a beef with Jungle.
Okay.
I asked him for an interview on 4 different occasions, and he told me he was too busy.
Well, dude, he's got his priorities. He's got his family, his job, watching Jerry Hall, and doing his own videos.
Nick, he's really missing out on profits, man. Give him a break. He's upset about his sell.
I ain't trying to hear it. I ain't trying to hear it.
All right, so you feel snubbed. Okay, fair enough. I've been snubbed by the best.
To be fair,
he won't accept my invitations either, man. The guy is busy. In this time of year, he's up to his eyeballs in work.
No, it's cool. I mean, I've had dinner with the Prime Minister of Pakistan. He had time, but that's fine. No, that's cool.
Oh, Crypto Aries in the house. Nice to have you, Ari. We
Crypto
got
Era is
Rose
dope.
in the house.
And Jungle is dope too, except for the video where he was drunk. But that was awesome. And Crypto Era is awesome. Yeah. So where were the question was
narrative or network effect, which drives which and which will lead which in the future. Is that correct, Adam?
Yeah.
Or close enough paraphrased?
Yeah.
Well, well, yes. The answer is yes, right? Because you're going to see pockets of both. This is a space that's not fully formed. So we have network effects that are kind of boiling under the surface all the time, as the balloon analogy, right? Put all of the assets as little black dots on a balloon, and then just blow up the balloon. And so there's an expansion of new liquidity and new eyeballs and new wallets into the market for a variety of reasons, because it's not a fully formed market. But then if you got really close to those dots, ideally, invariably some of those will form into sectors, whether it's protocol layer sectors, AI is a sector, NFTs is a sector, so on and so forth. And those sectors, you might see more explosive growth in those sectors as people tend to turn towards, sectors and assets that near term have a narrative that's more interesting or less interesting. We're getting through. We got through the DeFi narrative, at least for now. Now we're finishing off the NFT narrative. Now people are looking back and saying, is the DeFi narrative in AI? Is that the next DeFi narrative? My guess it is, but I don't know. But
right.
That's a good question. Demayan says, is Doge a narrative or a network effect? I think it's a network effect of the YOLO buck. And we could dive into the micro or the macro, the micro in the macro, meaning you have a lot of people getting paid to sit at home and stare at their phones and be on the internet. And most people are getting $700 extra a week and they're not paying rent. And my guess is that means something. And maybe that means less in June and July when all of that ends. So yes, I think yes, narrative is huge. Network effects are huge, and they both work, and they go back and forth, I'm guessing.
Well, I got one. Here's one for both of you, and it's something that I've been pondering and really trying to look at as I peek above the crypto fence to the greater world beyond, and I start looking at and thinking about, okay, how am I forming my concepts and my ideas and my investment strategies around trend and adoption when there is this massive demographic wave of the baby boomers kind of trickling out of, the workforce and asset allocations, or at least changing asset allocations to safer, more stable things that they can depend on as their incomes are going away. And that whole transition that happens, they drive less, they go out less, they do less, they spend less, and how this demographic change is going to affect the world.
Well, so I kind of got something on
fit in that. Fire away, Adam.
Cheat code Japan. Go ahead, Adam.
I'm gonna have a much dumber answer than Nick, but I was just reading an article about our attention spans and how currently they're at about 3 seconds, and they used to be about 15 years ago at 30 seconds.
That's a goldfish.
And then, what was that, Adam? What did you say? No.
And so I was thinking, if you've got 3 seconds to understand a crypto project, I mean, a dog on a meme is about all you got. You got a big dog face. If you got 3 seconds, how the hell are you going to understand Bitcoin, Ethereum, or Cardano, or Polkadot? You know what I mean? If that's where you're at. And it was kind of an interesting thing, obviously with the younger generation, and you keep seeing similar memes over and over and over. And then just the last wedding I was at, I'm taking a picture like, hey, you're into crypto? Yeah. Hey, you think Doge is a good investment? I'm like, oh man, get out of here. Just I got to pack up.
But so here's the other side of that. Doge, if you're an investor, it's hard to rationalize or justify that decision. But if you're a trader and you think you have a good grasp on markets and the value of social media and the value of a very vigilant community I mean, look what community can do. You could argue that there are a handful of assets in the top 10, a handful that are nothing more than community, that the fundamentals are not good.
I think as long as you're
and I'm talking about the number 3 one, not the one you think I'm going to beat up on. I'm talking about BNB.
Yeah.
I'm talking about a coin that is all dust and smoke and fucking mirrors. Pardon my French. But if you have a vigilant community and you have people willing to throw dollars at it, and again, I think a lot of this goes away in July and August and things. But right now, this second, as a trader, Doge was a good trade. I say was a good trade because I'm less inclined with what I think is coming, just one person's opinion. I don't know if it's a trade now. I think you better be very careful how you play it. And there's some other ways to play it too. There's some 3x long positions. You could whatever. It doesn't matter. Anyway, my point is there's a handful of assets, even in the top 10 of this space, that are there just because of whimsy for the most part. And so if you know that, as a trader, you might still see opportunity on there to trade around those assets. As an investor, it's a no-fly zone. You don't go near it. You don't touch it. They're intuitively flawed projects. But I'm also open to the idea that a project that can start out as a dumpster fire trash can joke, if it has a continued support and continued uptake and continued showing up on new exchanges and showing, I mean, you can make a joke into a meme can become an asset. Even if we don't, I know intellectually we don't like that, but we have to be open to the idea that just because we don't like something doesn't mean value won't be created in it. I hate it more than anyone. Remember, I came from the gold market. Doge is the farthest goddamn thing from money. Period.
So let me just play with this angle. I think this angle will be fun. I see it the same way of saying it's the same GameStop argument of saying I think you could have traded GameStop and could have made a mint, and a lot of people did, and you know when to get in and get out, and 100%. But and I think we all agree that there's not value behind it. Fair. So even with all that, but then I think it gets to a flawed argument if you then say, hey, GameStop's at 300 a share, and then now we can then have an argument that GameStop has value, which you saw people do. You saw people start saying, no, hey, I think this could be a trend, and look, I looked into it, and they have this type of value, and it's like, man, get out of here with that. There's no GameStop value. There's a public.
Yeah, GameStop is a perfect example of when people can actually be corrupted from the inside. So because what you can do is you get in a position that you came into for a trade, and in you're trying to justify and rationalize the position to the people around you, you start to believe your own myth. And it's kind of like if you tell a lie long enough, the only thing you remember is the lie. You forget what the truth was at the base. If you guys, Winston Churchill was an awful, awful leader. I mean, one of the worst. And he was asked by many reporters, aren't you worried about how history is going to look at you? He said, no, because I'm going to write it. History's written by the winners. And so that happens a lot in the crypto space. First of all, anything with Mark Cuban is a joke. If he gets behind anything, assume it's a joke because he doesn't understand anything about this space. He is cryptarded.
Well, and I thought he had such a bad argument where he was saying, hey, well, people will spend it. And it's like, hey, man, have a Gresham's Law look. They're going to spend it because it's the thing they value the least.
It's That's bad money. Yep.
Yeah.
Let's take a question from the audience. Since the on-ramp for crypto, this comes from Bill Gould, by the way. Since the on-ramp for crypto is fiat, what would you say to promote it as a new monetary system to convince the masses that they should be using digital assets instead of fiat as a better option?
I'm going to ask Bill if this was a question he posed in 2010. I mean, that is kind of the thing, isn't it? The question is the answer, right?
Explain, Nick.
Well, isn't that kind of already been decided? Like that is the core argument. The disintermediation is that digital assets And if we're saying assets, we mean all kinds, not just digital money, but digital assets in all varieties, answer a lot of frictions in the financial economy. And because they answer those frictions, there are a lot of areas where disintermediating or using a distributed ledger instead of the current legacy financial answer to that is a better way or a better path. And it's not always the best path. It wasn't great. Remember Lipton iced tea blockchain? You guys remember that?
Yeah.
So Lipton iced tea, right? In a can. They put the word blockchain in their name and their stock went up by like 4x. They've never deployed a ledger. There is no charting of that drank Lipton iced tea. No one knows how many lemon cans were sold. Nothing. They simply put the title in the name. That would be a misapplication of blockchain.
Well, the same thing happened. The same thing happened in the 90s. You have a business that's struggling. Add .com to it, and bada bing, bada boom.
So,
yeah.
I mean, I think it's kind of the answer is the question. Since the on-ramp for crypto is fiat, I'm not so sure that the on-ramp for crypto is fiat, because it seems like a lot of people are trading services for digital assets. They're trading services for crypto. I know that every way I can be paid by my clients, I try to get paid in Bitcoin. So, I mean, I think more and more the on-ramp for crypto is any other kind of money that's not as efficient as crypto, and some of that's sweat equity.
Right. Well, it's going to be that way for a while.
Yeah.
And the truth of the matter is as a tool in commerce, right? As a tool in commerce, if you're in the United States, tax laws do not favor using digital assets as a medium of exchange. They just don't. And until they do, it's, the best course of action is to consider these things stores of value in some way, shape, or form, and hold them, because the tax treatment to sell them is counterproductive to what you want to do.
Kool-Aid alert. Jerry, put Crypto Aries question up on screen. Well, her statement. Kool-Aid alert.
High liquidity plus growing community plus coming smart contracts with Flare networks. Doge, it might surprise all of us. Ari, it might. Here's the thing. There's one thing, and this is my only argument with Doge. I don't have any of the same arguments that Nick's has. It has an inflation schedule. The creation of the coin is so furious that if you don't have a continued buying of that coin, the gravity of the inflation of the token itself, the debasement, right? The debasement of the token itself by the mechanism of the code is going to, supply and demand. It's going to bring the price down. That part I can't get behind. I just was like, wow, I can't put $1 into that.
The macro. Well, there are things going for Doge, but none of them are technical. And because you could say that for 8,000 other assets. So Ari, one thing I like is that you're very clever and you dig really deep. I've listened to a lot of your stuff. You're really good. But what I would say is be careful that you're not being too clever. For instance, there was a lot of people that were, trying to read into what Elon was saying, be like, Elon is planning for Dogecoin to take over the whole world and all this kind of, and sometimes you can dig so deep that you become a flat earther. And it would be like saying that same argument could be said for thousands of digital assets. One of them is Tron. I don't know too many people in this room that would drop everything and go buy more Tron because they think it's going to surprise us all. Doge already did surprise us all. And it's so anti-intellectual that it did surprise us all. But I would be careful to try to rationalize a future trajectory on that token based on the fact that it surprised us, because every kid between the age of 16 and 26 spent their extra $700 a week on Doge after hitting the lottery with GameStop. So I would just be very careful that you don't draw lines that might not exist.
All right. This is a great one. I'd like to know what you think about Flare custody is tether-backed bank.
Oh, you mean I'm not sure what she's saying. Del Chain, you mean Del Chain being the bank that's I think Flare has some problems. Just the Flare network is a little bit again, I know this is an XRP rich community. But you know what? I already have enough friends. So
I'm not going to disown you just because
if
you have a strong opinion that's counter to my own. I will
if you
not
read the Flare white paper, you come away wanting. It's very unimpressive. It's marginally uneducated. It's rife with grammatical errors. I mean, maybe just start with a spell check. If you're going to put a white paper out, just a regular one that's in Microsoft or even the one that's in Open Office. It's free. So there are some intellectual problems with Flare. It's a little spammy. Flare reminds me of the DeFi version of Tron, where anytime anybody does anything, Tron does another version of it real quick as possible. And Justin Sun says, me too. Me too. We do that too, including, copy and pasting sections of the Ethereum white paper in the Tron white paper. And so that kind of behavior, that kind of chase every headline, chase the noise, we always joke if Jerry pops out a Jerry coin, 2 days later, Flare will announce that they're going to wrap it. There's going to be a F Jerry. So I'm not super excited about anything Flare does, but the XRP community is incredibly vigilant, and I'm not going to bet against that. So for that reason, I'm not going to sell all of it, but I'm going to sell a lot of it as quick as I can.
Right on. Here's the thing. There's going to be, I think every ecosystem that has a community behind it will find its equilibrium, right? And a growth trajectory based off of, most likely like real fundamentals.
Flare, not Flare Finance, Flare.
Let me kind of just jump in with maybe a general take on this that I kind of see pretty prevalent in the whole crypto community, and myself included, is that we're always playing offense and everyone is just hunting yield in a way that is going to bury us, I think, before we really build wealth, not just, some paper money. And to me, we need to look at playing defense just as much as offense. And what that means is, what assets do I have that are least likely to just, tank and make me lose a lot of money? And I to me, like Nick talks about it as sleeping at night. I talk about it as playing defense. And, I like to look at my portfolio, and I think I can do a better job with this, of looking at it in a way that won't send me to the poorhouse, or where that will actually allow me to keep the profits I've made while continuing to earn more profits and really look at my risk too. And I think that when we just keep chasing the next hottest thing, we just get in this, we lose all mindset of playing defense and guarding all the gains we've made.
I have to put a little parentheses. I have a profound amount of respect for both Airy and Jungle. So it's with hugs and snuggles that I say all of these things. There, I had to caveat that because I don't want them to think that I'm just being an aggressive D-bag. I'm a D-bag, sure, but not an aggressive D-bag.
Well, I'll tell you, one of the, and here's back to the thing. We're all on this journey of discovery together, right? And as this market matures, it's going to be a process of, who gains adoption, who garners those incredible network effects, right? And how can we recognize those things? So, like one of the things I really liked I got from you, Nick, was looking at my portfolio as, okay, what is the most de-risked platform on the planet? It's Bitcoin, right? What are the next applications that somebody will tap on their phone that a billion people will be using. It'll be built on a smart contract platform. We don't know if it's Ethereum, Polkadot, Cardano, Elrod, Tezos, Near. We don't know. So getting some exposure to all of those things gives you exposure to the platform that will launch the next dApp that a billion people will be using. And unlike any other networks that I opened the show with, none of the networks that came before digital assets did participants partake in the profit of the network. They were always by the companies or the founders. This digital asset space gives us the ability to get on the ground floor and profit from a protocol, profit from an application. That is the paradigm shift that we need to adjust ourselves to. Go ahead, Nick.
I was going to say, can we touch on Jungle had said a dot rundown. I'm guessing he means Polkadot. And so the way, I mean, most of you know this, but I'm going to say it as if I'm talking to people that are new to the space, because people might find this video and they might say, man, what's DOT all about? Why is this so exciting? So in the beginning, you go back to just before the DAO hack with Ethereum. Ethereum was everything hunky-dory, and then there was an issue, and there was some pilfering. Let's just say that. I don't want to attack Ethereum, but there was a pilfer, and a lot of money disappeared. Millions, many tens of millions. This was the DAO hack. And the three main brains, I don't count Lubin as the main brain, but the three main brains were Vitalik Buterin, Charles Hoskinson, and Dr. Gavin Wood. Dr. Gavin Wood, as you may or may not know, was the creator of Solidity. He wrote Solidity. Okay. He also has a company. It gets real nebulous, but let's leave it like high level. So Vitalik Buterin started as a journalist, worked at a lot of different companies. He shows up. He starts this project. He wants to make a world computer. It turned into something a little different, as we know. It turned into the first real proof of concept for a smart contract platform. And that was amazing because it allowed other people that didn't have a network built to click a button, fire up a token, and there was a network already there. Unlike Bitcoin had to convince miner after miner after miner to donate resources to Bitcoin, ethos. So we have Ethereum, we have the DAO hack. Here's where things get weird. There was a break in theology. Basically, it was protect the investors or code is law. And they chose to protect the investors, so they forked the token to protect the investors. That's why there's an Ethereum Classic and an Ethereum. Ethereum is the second one. Ethereum Classic, so like Code Classic, right? So now we have two tokens. And most people, for a variety of game theoretical reasons, chose to follow the path. However, there was more than a break in the token. There was a break in the theology, the mindset, the religion that was the early. And this goes back, if you read about it, to literally there was a big blow up at a beach house in Miami. And at that point, Charles and Gavin walk. Now, it wasn't at the moment. They didn't both walk at the same time. But basically,
Charles left 10 minutes before Gavin.
Yeah. He's like, I'll go first, then you just go later. And we'll leave Vitalik with the bill. So they leave. Charles said, I'm going to take a more science-based theoretical view of smart contracts. And let's back up a little bit. We've now seen the nasty side of go fast and break stuff. And that's why, because Ethereum continues to go fast and break stuff. And that's fine. That works for them. The problem is, as we've seen, there are a lot of problems with Ethereum. So Charles said, I'm going to attack it from a more scientific pursuit, direction. I'm going to go get the smartest minds on the planet human. I'm going to assemble them, and I'm going to have them look at this problem from every possible way. And I'm going to have universities and scientists and critics and data scientists and everyone that we know tear our ideas down to the dirt and tell us why we're wrong over and over and over, and use the scientific method to create a smart contract platform that could create financial identity and scale. Okay, so that's one direction, and we get Cardano. And Cardano hasn't meaningfully launched yet. Still, they would meaningfully launch about the second week in August of this year, when smart contracts are finally available and Alonzo is launched. And we're all waiting for that, and that's going to be amazing and great. And then you have Dr. Gavin Wood, who went the other direction. He said, cool, I think there's another way to tackle this. I should know. I wrote it. So he realized that there's some structural issues with Solidity. And so now Substrate and Rust appear. And so what he solved the problem in a different way. He said, what if we just made this main spaceship that all of the other spaceships could dock with?
Right.
Or as like a pump, right? Like a fuel pump that every possible plug could plug into, and they could pump their fuel through us. I mean, and it wouldn't even have to be blockchain based. The eventual goal of Polkadot is that every single input anywhere in society can find a way to plug in to the main or the relay chain, which is Polkadot, and every single financial product that you can imagine, whether it's wheat, whether it's soybean futures, whatever you can imagine, real world or otherwise, would find a way to port in to Polkadot. And so that's the idea behind Polkadot. Everything can plug in. That's kind of a simple way of saying it. So that hasn't meaningfully launched either. Their mainnet, hopefully, and their and I know this is a long, circuitous thing, but if you don't know the history, you don't know the history. And so that launches in June. That's the parachain offering, where they're going to allow 96 companies, projects to fight for spots. The ones that don't get spots, those parachain slots, those 100, which I think 4 of them went to nonprofits, those 96 other slots, then they will launch on Kusama.
And that is that's our dot moment of the day, folks. Adam, anything to contribute to that?
No, actually, I think that was a great summary.
Yeah.
No, I mean, I think
to understand history, right?
And I think the only thing that I'd add to what Nick said about Cardano that I think Charles did pretty well is Charles, I think, very intently structured a burning platform as well, meaning that this higher good, even outside, everything, just that we're here to help the disenfranchised, the less fortunate, the people that win lottery. And I think whenever you're wanting to build a community and you want to get people excited, especially developers that don't need the money, they can go anywhere to earn plenty of cash. It's important to get people excited about something that's even larger than just being rich. And I think he's done a pretty darn good job with that. And he's not the only one.
Well, having partied in a bunch of communities, and first of all, I don't drink, I don't do any drugs. That's asterisk. But I have spent a lot of time in Europe. I've spent a lot of time in Puerto Rico. That's all you need to know about that. And I've hung out with a lot of these people, most of them. And I can tell you this, the now Polkadot / Substrate / Rust community, they party. They party for real.
I'm sure.
And the Cardano community codes.
That's some good insight. Where you put some cash, that's important. That's important.
It's not lost on me. I mean, I think there's only one digital asset that has proven that it's actual world utility, and that's Bitcoin. The other 8,000 are gambling. However, in that big giant pile of gambling assets, there's only one person that I innately trust. And right now that's Charles Hoskinson. I think Gavin is brilliant. There's a lot of brilliant people. Listen, Brad Garlinghouse is brilliant. He's just a thief, but he's brilliant. So is Chris Larceny. He's brilliant, but he's a thief. And so I don't care how fucking smart you are. If you're willing to steal from me, I'm out. I'm just out. And the problem I have with Gavin, and it's not a big problem, it's just he's still got a little bit of that move fast and break stuff in him. And remember, the DAO hack wouldn't have been made possible without some of the things going on in Solidity, which he wrote.
Good point.
And he also subsequently got pilfered for another $123 million when they were launching Polkadot. Lest we not forget, this wasn't like a one-time thing. People have been hoovering up money from Gavin Wood projects for quite a while. So, I mean, I just keep coming. All roads lead back to Charles Hoskinson. He's just the only decent dude, and he's not perfect. He doesn't walk on water, but he is a decent dude. And that's kind of where I'm left with, am I going to invest in? And the answer is I invest in all these projects because I like to be on the ground floor. But if I had to hedge, I would hedge towards Charles and Ben Gortzel and the incredible team they have there, which I'm doing a disservice by not naming some of the other individuals. And there's a lot of incredible people at Ripple, right? Ashish is great. There's a lot of great people there. But if I think someone's going to change the planet human, it's Cardano.
Interesting. That's an interesting thought. I'll tell you, I got lucky and bought a lot of Cardano when it was really, really cheap and, held still most of it.
Did you get lucky?
Well, you know what I did is I got it somewhere in my brain. It was like this 3 cents that I'm spending now is going to be $1 in 5 months.
Because I remember the conversation. I remember when you pulled that trigger, Jerry.
And I bought all that Cardano.
I remember it. I was sitting on a park bench drinking coffee, and Jerry was telling me he's about to go, taint deep in Cardano.
And I did.
And he did.
Well, here's the thing, and I think it's really important from a perspective, the rational mind should understand, like, and I'll second what you said. We've got one asset in this space that is past the point of no return, that has got adoption on almost every social economic level there is, whether it be lower class, lower income, medium income, high income, institutions, governmental, it's all the way down the road. Bitcoin has become a real bona fide asset, and everything else are really, really interesting projects that have incredible use cases. And to know which one is going to, in the long, be here in 10 years, I can't tell you. I have a good idea, and I put my bets down. Like, I honestly believe Cardano is going to be here. I honestly believe XRP is going to be here. I believe that some of these AI platforms are going to be here because I can see, as I look through a macro lens, I can see all the other industries that are just trending. You've got autonomous driving, electric cars, smart homes, Well, what makes a smart home a smart home? It's artificial intelligence, right? Algorithms being built to function without our interaction. That's really all AI is. If you kind of simplify it, it can get more complicated than that. So where's all that going to come from? You think Google, Facebook, and Amazon, the 3 largest companies in the world with the largest AI R&D departments, are going to give that shit away? No. They're going to create products and they're going to sell it to the market. There'll be other people creating products and selling it on the market using stuff like Fetch, using stuff like AGI. I want a piece of that. I want to be there and benefit in that protocol going forward because I can see the trend. The trend is the signal. If that makes sense, or am I rambling like a madman in Costa Rica?
Yes.
All right. So, hey, I want to ask you guys this something. As we look at network effects, how about I'd like a definition for both of you, and I'm going to start with Adam. What would be how would you describe network effects to your 5-year-old son or your Labrador Retriever?
Oh man, that's not fair. I had a very non 5-year-old.
Okay, go with your 20-year your drunk on crack grandmother approach.
Yeah. Well, I don't know. Okay. Let's give the 5-year-old go. We'll talk about bunnies multiplying, and that as there's rabbits produced, and then there's a male and a female come together and they produce 5 rabbits. Then when that rabbit community then gets of a certain age, those 5 rabbits mate and they come together, and now there's 20 rabbits and 80 and 200. And I think network effects are the ideas of where the where the community now becomes your best, now becomes a strong marketing arm for yourself to then tell and get other people.
Okay.
That's
Nick,
my
what would be your simple explanation of how to describe network effects to somebody that you just met who's asking a simple question over treadmill? He's the guy on the treadmill next to you at the gym for cardio morning. So
I would say that each new individual into a network introduces 2 or 3 elements that expand that network's value. Well, one is they bring their wallet to some extent. They bring their network, their friends, right? The good steak, bad steak thing. You have a good steak, you tell 5 people. You have a bad one, you tell 50 people. So network effects can be negative as well. You can, right? But so they bring their wallet, they bring their friends, and they increase the solidity or safety or sanctity of the network, right? 2 or 3 people, it's like legs on a table. Three legs. One of them goes down, the whole thing collapses. 100 million legs, you can lose 99 million legs and the table still stands. Matter of fact, you lose 99,999,993. Still stands. And so it's as you introduce new individuals, they bring with them their money, their friends, and that creates an intense amount of value. And that value scales relatively logarithmically. However, it's not in a straight line. It scales in waves. And those waves you could probably find a way to map out the explosion in the speed of social networks and how quickly information gets out and how quickly network effects take shape, which is now probably way more than they used to be. That's a very good definition, very good explanation. Thank you very much. Now those of us that are now clued in, right? We're looking at this incredible industry through the lens of these are networks, and network effects are going to drive either the success or the demise of these projects. How do we then measure adoption? What are analytics that we can go look at, whether it be for the whole industry or a specific project?
Well, let me kind of. I think Nick brought such a good point, because maybe even how we previously looked at network effects is outdated. Because the common example used is cell phones, right? But
Metcalfe's law, right? The communications graph.
But the problem there is that's such a single dimension of engagement. Whereas in a cryptocurrency project, you almost would gauge it. Attention might be the closest, but I like how Nick's talking about it, because wallets and purchases is just one aspect. And especially with everybody being so intertwined with social media, there's also a posting degree to it. And then there's also engaging people to develop on it. And then there's engaging people to create their own ideas on it and to leverage it and to become involved in it, like a Project Catalyst, where there is just a big difference of how much attention we put towards a specific project and how much it can garner. It's so much further than our wallets or just buying a little bit or having a little bit of bandwidth. There's a lot more dimensions to network effects with crypto than I think maybe we've ever seen in any other type of space or asset class.
Unlike previous networks, i.e. the wireless wave, the social media phenomena that is Twitter and Facebook, all those incentives, none of them were monetary, right? So now we get to factor in behavioral economics. We're all incentivized to increase the network, right? From a monetary base. It's in my best interest with every new person that puts money on XRP or DOT or any of the tokens I hold, Bitcoin, doesn't matter. It's in my best interest if people come to those networks because I'm financially incentivized. I wasn't financially incentivized to get free friends to plug into Facebook so we could share pictures of us when we were 5 years old.
But there were clear incentives.
Clear incentives, but not monetary ones.
Well, I think it depends, right? If you were an owner of Facebook shares or, an owner in, some social network index fund or an S&P, but there are some, but you're right, Jerry. I think this is a big difference is that there's two things we're seeing right now that, we've never seen this. And kind of, let me back up just a second. What Adam is saying is use, utility, and adoption. I think that's basically what he's saying is, and it's some combination of use, utility, and adoption. And in that, then you can start saying, okay, how many new wallets? But I also think another metric other than use, utility, and adoption is expansion faster than currency supply. Yeah. I think when you see these tokens expanding faster than token supply, it gets rid of the deflation arguments. It gets rid of the I'm here, the digital gold, all this kind of bullcrap, which, again, in some specific instances like Bitcoin may apply. But for the rest of this space, I do think that most of these projects are trying to meaningfully change the world. I know that most of them won't, but a few of them will. And then we're back to what Adam was talking about: use, utility, and adoption, and expansion faster than government currency units. Because there is, like you said, Jerry, there is an economic element, an incentivized economic side to this that there wasn't before. And additionally, we've never seen a new asset class. None of us here, unless there's some Ouija boards plugged in. I don't know about. Maybe Crypto Aries got the Ouija board going and talking to somebody from 1696. But otherwise, we don't know. The last new asset class was in the late 1600s. It was the British government. They needed a way to finance the war. They started war bonds. They financed the war against France. It was so good that the French decided to do it. They're like, oh yeah, we'll show you. We'll make war bonds. So, and everybody got hip to this idea of forward selling future prosperity. Hence the bond market. But we don't really know what that looked like. This is the first time that us have been able to watch a brand new asset class, any of us, in the last 300 years. And two, we are financially incentivized to participate because unlike the internet, which wasn't an asset class, it was just kind of a sector. It was
a technological innovation.
Yeah. And when it expanded, we didn't really have a meaningful chip in the game because we weren't allowed to play. None of us
Apple
were really.
Did, Google did, Netscape did, AOL did, but not us. This is our chance. I'm planting a flag. I'm telling you right now, I'm investing in crypto. I'm in.
But
sign me up to Coinbase, somebody.
But what's very interesting is if you democratize investment, you get all the sides of it, not just the pretty sides, but you get the ugly sides. Pure democracy is a quagmire a lot of times, and you get what's called, the scenario of dishonest majority, perverse incentives, and you get these weird situations where game theory is the underbelly of all of it.
Well, that's where you get Bitcoin SV. That's where you get, the Ethereum split. That's where you get this. All that stuff comes from those.
Everybody's super excited about Bitcoin. I own a lot of Bitcoin. I see people getting levered up. I purposely gut them to destroy value, to decimate them, to short the asset simply because I can make 2% on the swap. It didn't matter that I liquidated $9 billion worth of people's paychecks, that I nuked all these people that were being reckless with leverage. That doesn't matter. I made an extra 2-3%. It's worth it. So there's all sorts of perverse incentives. And from a free market perspective, you get all of it. You don't just get when people say, oh, it's manipulated. It's all manipulated. Everything, every sale between two people is manipulated. I want $10. Jerry wants to pay $9. We agree on $9.50. Jerry got manipulated up. I got manipulated down. Oh, true democracy is two wolves and a lamb voting on dinner.
You know what? I love. I've heard you say that before. I love it. We've got coming in off the street somebody who has been incredibly generous in the chats for both my stream and Nick's stream. A man that really needs no introduction, but I'll introduce him. You all know him as Scorpsion. Welcome to the party, man. Hey, Scorps.
So, I don't hear me now.
the one tech genius amongst the four of us is having the tech issues. Hello? Oh, there you go. You're stabilizing.
Jerry,
bring it home. What do you think? Yeah, I can hear you. What do you think so far, man? What have you picked up from the show?
I'll tell you what. First of all, I apologize. We had a power outage right in the middle of the show, and I had to scramble to get candles going. I'm literally on my phone, through the 4G network, trying to jump on the stream. So I apologize up front if I lose connection with you.
No, that's okay.
Back up. Not enough time to jump on this. I missed parts of the show. I apologize.
Well, I mean, this show, this morning's show. Yeah, wow, man. I love it. So, okay, you made sure the family was safe. You put water in the bathtub and got on the phone and connected somehow to come on to Market Conversations with Nick Black, Jerry Hall, and Adam. Wow.
Kiss my doggy.
Do you have a take? Do you have a take on this whole network effects, adoption curve? The trend is the signal. What are you seeing as somebody who follows the larger space? So there's a lot of people you follow. This is a great time for you to, share. What do you think's going on?
It reminds me back during the quote unquote .com bubble, and I remember when I was working for a company, and there were some higher people that had a lot of money that were actually making a lot of money in the .com boom at the time and running with it. I see similarities. I obviously a lot of differences, but I see a lot of similarity in called network effect of that. And I guess we're going to also see, as you talked about, the ability that to happen and weed out the garbage and allow the cream to rise to the crop, or the crop to rise, the cream to rise.
Uh-oh.
Did I lose? Did we? I do apologize for.
Yeah, we're getting your words 3 times. I don't know if any of you remember Max Headroom. Remember Max Headroom? Let's do this, Scorps. I'm going to invite. Will you come back next week when you got power?
Yes.
All right, thumbs up, brother. I want to bring you back next week. I really. I'll tell you guys. Scorps helped me today in a big way on a Zoom call, work through some of my computer problems that I was having. And over that course of an hour and a half, I got to just chat with the guy. What a wonderful, generous, bright dude.
I like how you just first worlded his ass. You ain't got power. You're out.
Oh, dude. I'm in a rainstorm in Costa Rica. I'm shocked I'm still airing. I really am. I shouldn't be here right now. This whole thing should have blown up in our face.
You want to hear something cool?
I do.
So I don't normally talk about clients, but this one is kind of interesting. I may put together a fund for the Teamsters.
Oh, that would be interesting. Lord knows they need to get some yield, man.
Yes, better than the pension funds, right?
Yeah, so I can't say anything more than that, but it's been an ongoing discussion, so we're on the path.
Nice.
You know what's really interesting is how the world outside of crypto has created the perfect setup for crypto. You know what I mean? I mean, if you were a fledgling, this fledgling little nascent thing, and you needed A, B, C, D, E, F, and G to come into alignment to open the door to the masses for you, you couldn't ask for a better A, B, C, D, E, F, and G than the macroeconomic setup of the world, and exacerbated by COVID. I believe all these things were going to be coming anyway. It's not like any of this stuff is new.
Crypto Area made a good point. She said the amount of developers that choose a platform to build on is a big factor. That is true, but I kind of glom that in with, when you say use, utility, and adoption, to me, that's part of the adoption. If you look at where a lot of devs are going right now, there is a crazy amount of devs that are working on Substrate, Rust, and Near. None of those are Ethereum.
Right.
And so it tells me that a lot of people are looking at Near. By the way, if you're a protocol layer investor, you're duty bound just to at least take a look at Near. Again, don't ever do anything I say, but at least you want to investigate Near. It's a Coinbase project, A16Z. So it's Andreessen Horowitz. Don't ignore Near. There's a lot going on there that people are not really paying attention to. And Near has already done everything that Ethereum endeavors to do. It's already done. WebAssembly, it's all done. So just pay attention to it. But yeah, she's absolutely right. You know, where the developers go is where the future projects will go. And developers are fleeing Ethereum pretty fast. There is a lot of continuing development on Ethereum because it's the only really deployed smart contract platform. I don't count Tron. So, yeah, but in 3 months, when Cardano has meaningfully launched smart contracts and the Pioneer program for Plutus is huge, there's a lot of people plugging away in the Plutus playground right now. And so we'll get some metrics on that. We're going to see in June what Polkadot looks like, but my guess is there is a crap box full of people that are plugging away in the background there. I mean, look at the success of Kusama. If you don't think that's going to translate to how excited people are about Polkadot, you're crazy. So I think Polkadot's probably due for a big pop as well. Again, not advice.
Well, we'll see. You know, this is the time of the program where I say, wow, what a show. Let's talk about some final thoughts. We brought our producer Brady in. Let's do it like this. Let's go Adam, Nick, and Brady, your final thoughts in that order. And I'm going to invite you guests to hang out in the green room after the show for cocktails and bad language.
You know, I just wrap it up with where we started. You know, I think looking at a project with a strong narrative is great. I think when you get when you're looking at network effects are great, and when you can get them compounding and snowballing, I think that's when you can turn a little bit of cash into generational wealth. So that's my thoughts.
Right on. Adam, we'll see you backstage in a minute. Mr. Black.
I would say final thoughts, decide whether you're going to be a trader or an investor and have a plan, even if it doesn't seem like a good plan. Have something you stick to. You need some base layer, some basic foundation for which you build your investment thesis on top of. Because if you don't have that, you're just always going to be chasing green candles and all this kind of nonsense. You're going to be a noise trader, and you really want to have a system by which you trade, because a system is editable and auditable, right? You can look in things that aren't working, you can fix them. If you're just being whimsical, and you can't manage whimsy. So get yourself a system. Even if it's not great, you can fix it, you can clean it up, but have some system.
Wow. Strong final thoughts. See you backstage in a second. Brady. Producer Brady.
Hello.
Oh, man. I can't wait to see what you've crafted for tonight's final thought. I am on pins and needles. Fire away.
It's kind of a mental, it's a sentence, but it's deep. So hopefully it'll make sense.
Okay.
Compounding investments help you, I guess, cover your capital while going through the learning curve of trader versus investor. Because while you may feel energetic and excellent, cool, you win because you got money, or at least your trade benefited you. So then you think, oh, I'm a trader, this is easy. But as Nick says, statistically speaking, you know, when you do make that double down, or you do lose more than you were willing to, that kind of eats away at the less prominent profits. Whereas if you invest in not a continual basis, but look for projects and dollar cost average in, and then take profits, and you know, everything that we speak about here in the crypto world. But yeah, it's always good to dive in as deep as you can go, but don't always believe everyone, because then if you're looking around and no one knows what the inflation schedule is to Doge, and you're like, oh wait, what? or how many there are and when. I mean, it's just show up, ask questions, and invest accordingly.
That's good advice. Right on. Brady?
I'm trying to live it myself.
That a kid? I'll see you backstage in a minute. Wow, what a show. What a show. Good topic. And what's wonderful about the larger community as a whole, when we get together, we present our ideas. If we keep a little sliver open, right, to be willing to be wrong. I'm willing to be wrong. Most of the time, I don't think I am, but I'm willing to be wrong. And it's through guests like we had on tonight and you folks in the audience, through your questions and your contributions on this show, help me to achieve my goal. And I have one very simple goal, and I think it's the same for all of you. That is to be a better investor tomorrow than I am today. You've all contributed to that journey for me tonight, as well as my guest, Nick Black and Adam, as well as my producer, Brady. Thanks so much for all of you who've tuned in and continue to support this channel. And all of you from this community that have joined the Patreon group. This investment club is getting a lot of fun. I hope that you have a small circle of people that you're able to, that you trust enough that you can share really what's going on with you, your concerns, your fears, the things that you feel confident about, and be willing to be challenged. I've found that. I hope that you find that, because this journey is just getting started. So we'll see you all next week. And from Costa Rica, Pura Vida.